Hello and welcome to Zee Commodity Capsule. It's Friday and we are seeing gold prices are largely range bound but with a positive bias as it trades above $5,100 an ounce, which with a slight increase of 45 to 50 odd dollars today after having shed nearly 1% in the previous trading session as investors stayed on the sidelines assessing the impact of the widening Middle East conflict on the global economy. We have seen that the US-Israel-Iran war has entered its 7th day. Iran launched a series of attacks on Israel, the UAE and Qatar. US Defense Secretary Pete Hegseth and Admiral Brad Cooper, who leads the US forces in the Middle East, said that the US has enough ammunition to continue its bombardment indefinitely. Similarly, US-Israeli military campaign against Iran launched on Saturday has struck targets across the country and triggered Iranian retaliation. Having said so, global energy prices we saw soared as the war disrupted supplies and shipping, prompting some Middle Eastern producers to even cut the production. Meanwhile, we have seen that US market continues to expect the Federal Reserve to keep the interest rate steady at the end of its two-day meeting, which happens on March 18th. Investors now await the US employment report for February, which is due later today. Oil prices, meanwhile, have shed slightly their gains on Friday after 5 consecutive sessions of upward movement, but remained on track for a sharp weekly surge as escalating conflict in the Middle East raised concerns over global supply disruptions. Brent crude prices were slightly weak, but holding near $85 a barrel mark, which happens to be its highest level since July 2024. Brent oil jumped nearly 5% in the previous trading session, while WTI crude surged over 8%. Both the contracts were on track to advance more than 17% this week if the gains hold, and this would then turn out to be its highest weekly performance since the year 2022. We have seen that conflict in Middle East as it entered the 7th day on Friday with no clear signs of easing is keeping global financial markets on the edge. Steel rebar futures rose above Chinese yuan $3,080 a ton, basically near 3,100 Chinese yuan a ton, approaching one-month highs as China renewed its pledge to support the steel sector by curbing the excess capacity. We saw that the economic planners at National People's Congress signaled plans for orderly reduction in steel capacity, a move that could lift steel prices and improve the profit margin. China has also set 2026 GDP growth targets of 4.5% to 5%, which, by the way, happens to be its lowest since the early 1990s. Malaysian palm oil is where you need to keep your eye on, as it has risen for second consecutive session on Friday and were poised to post weekly gains supported by strength in Dali and edible oils and a weaker ringgit. And raw sugar prices fell for second straight session on Thursday. It settled near 13.72 cents a pound, hovering close to September 2020 lows. Potential loss of demand for raws from Gulf refineries as the Middle East conflict disrupts shipping had helped offset support for sugar linked to higher energy prices.